All right, guys, welcome to the latest Santiment education video. My name is Brian. I'll be running you through some charts today. Before we begin, I'm going to start giving introductions as to what we do for the newcomers here. If you already know, stand by or skip ahead 10 to 15 seconds. Santiment is the leading on-chain social and development activity cryptocurrency platform in the world. We have over 2,700 different assets for you to choose from to help make the best possible decisions for your portfolio. With that said, today what we're going to look at are 6 different metrics and which asset among the top 2 to 300 or so crypto market cap assets out there is kind of the leader in that category. Obviously, there are many different ways to measure whether something is bullish or bearish at any given moment. And these are 6 examples that maybe you haven't thought about or tracked too much because you're more into another metric, and that's fine. But when you combine them all together, you tend to have good results, right? If you see daily active addresses and whale activity looking very bullish for an asset, right? That's 2 very solid metrics. And in this case, you're going to be looking at basically the best or one of the top 2 or 3 out there in terms of this particular metric that we're looking at. So to begin, as I'm sharing on the screen, we're going to look at the RSI, also known as the Relative Strength Index. Gives us an idea of just where things are in terms of how undervalued or overvalued it is with relative strength in mind. So basically when prices are going up, especially at a very fast pace, the RSI goes up high and indicates we're likely going to see a top soon like we saw here. On the other end, if we see it very low, then that's an indication that there is a very high strength or high likelihood of prices rising in the near future. The last time we saw Sushi, in this case, being this low was back in October 15th. And just in the last couple days, between December 18th and the day of recording this, December 20th, we're really starting to see a lot more bullish signs that the RSI will indicate that prices are going to be shooting up in the near future. Certainly doesn't mean we're going to have anything like this going on, right? This could be considered an anomaly. But with probabilities in mind, when you look at an RSI that got as low as 23.7 just a couple days ago and now sits at 28.4, pretty much anything under 40 is pretty good and in bullish range in terms of the one-day relative strength index. So I like Sushi Swap here for the sole reason that it is one of the best candidates right now for the one-day RSI. Moving on. Next up, almost all of you are well familiar with Litecoin, the second oldest asset in cryptocurrency, coming just shortly after Bitcoin was introduced. And Litecoin is looking good on the long-term end because of the fact that it has kind of lagged behind the markets for quite a while. You might say, well, that's because it's an old ancient coin and nobody's interested anymore. Well, I can tell you based on some other metrics and whale activity and even a lot of capitulation going on with tiny addresses that there are some other good looking signs besides just what we're looking at here. This is a chart of the 365-day MVRV ratio. Now the MVRV also stands for market value to realized value, and it's essentially measuring the average trading returns of any address that has been active, in this case, in the past 365 days. When the average trading returns are above 0, which is signified by this straight line at the very top of the axis, that would mean that it is actually in profit for the average address and actually has less likelihood of continuing to climb. If it is well below average, like it is now, the average 365-day wallet or active wallet in the past 365 days is at negative 13.4%. That means there's an argument that prices should rise eventually in order to balance out for a metric that will always hover around 0%. Now, certainly there could be the argument that it's just going to stay flat, but at the very least, when you see very negative MVRV, like you have consistently for the past 3 months, because Litecoin hasn't been performing as well as most assets, especially since its halving that happened over the summer, there's at least a very minimal chance that it will drop at the level of the rest of the assets out there. So it's kind of a high floor, high ceiling type of situation for Litecoin right now. And that's why we like it as one of the best long-term investments in terms of MVRV, which is, in my opinion, one of the top 3 metrics on Santiment today. Moving on to the next, we're going to look at weighted sentiment. This is a popular metric that had in the early part of the year and middle part of the year a little bit of a pause in people using it because of the fact that Mr. Elon Musk, who bought Twitter and changed the name to X, he changed the API around and temporarily made it so that there was a new measurement in terms of social volume that made weighted sentiment somewhat obsolete for a while. Well, since June or July, it's become once again useful. So we can look at the past 3 months and measure the data in September versus the data that happened now, as we're looking at here, and get an accurate assessment of how positive or negative people are toward Quant at this given time, which is what we're highlighting here. Not only does it measure the positive versus negative commentary based on Santiment's algorithm that is able to decipher whether a comment is extremely positive, semi-positive, neutral, semi-negative, or extremely negative, it also will measure just the overall discussion rate. So when there's a lot of discussion, usually it's related to FOMO, certainly not always. Sometimes it could be due to a lot of FUD or something like that, but generally the perfect alignment is when you see not a lot of discussion and the few bits of discussion that is happening is quite negative. And that's exactly what's been happening more and more just in the last week or so. You can see it really started to go negative on December 13th and 14th, fluctuated, got a little neutral here, and you can see now this is actually the most negative day in terms of weighted sentiment since going back to October 7th or 8th or so, and this was very close to the bottom. Now we're looking at the daily intervals at the moment. You can of course always highlight the metric, go to interval, click on that, and we'll do 7 days instead. And you can see very clearly this is the most negative week we've seen since going back to late September when you look at it from this perspective. So either way, whether you're looking super short term or a little more on the midterm scale, you can see that Quant has a very, very negative sentiment, which oftentimes will signify that a price surge is coming in order to get traders not so pessimistic about the asset and throwing out quite so much FUD. So that is what I like to see on the weighted sentiment side. Quant is one to look out for, and you could be a good counter trader right now by being bullish on it while there is so much bearishness revolving around it. Next up, all of you have heard of Cardano, a top 10 asset out there. And the reason we like it for one particular metric is, generally speaking, when you look at the total amount of holders of an asset and you suddenly see it drop off, that's actually a pretty positive sign, because it almost always means that it's the tiny addresses that are liquidating. Total amount of holders, if you don't know, measures the amount of wallets that have more than 0 ADA. They could literally have 0.0001 ADA, and that will still count as a holder. But if it has 0 and it's completely liquid, then it goes off the books. And that's what happened here when we suddenly saw a huge drop off from November 17th to 18th. And it was mostly wallets under about $100, even more so under $10. You might say, well, you know, $100, that's actually not too small a wallet, but generally speaking, when you see this many wallets going down, it's going toward those sharks and whales, which is why we like it. And sure enough, you know, this is not confirmation bias. This has happened many times. You see this drop here, and then a couple weeks or so go by, or actually only about a week and a half, and suddenly you see this big surge. And this was very much a decoupling where Cardano moved way ahead of the rest of the altcoin pack for a few days. So Right now, it still looks good because the amount of wallets aren't really growing. You can see the general usual pace in which, ADA wallets kind of grow, something like that, right? And even right now, if I draw a line ever since here or so, it's still kind of going down. And to me, that's a pretty positive sign and an indication that there's still a lot of doubters of Cardano. This works kind of similar to the last one we looked at with Quant, where the weighted sentiment is super negative. In this case, it's just people maybe not talking about it in a negative light, but they are dropping wallets like flies right now because they're simply disinterested. Maybe they, decided to profit take after all this. Who knows what this was all about? Maybe some of you do and you're Cardano experts, and I'd love to hear in the comments. But overall, I like the idea or the indication that is that Cardano's wallets are still liquidating and not growing. In the long term, different story, right? Over a period of 3, 4, 5 years, if you're not seeing the amount of wallets grow, then perhaps that asset is just getting abandoned and doesn't have much use. But on the shorter and midterm scale like this, especially when you see sudden drops or, you know, slides like this for such a popular asset, which Cardano still is, that's a sign that there is some FUD going on that you could take advantage of and increases the likelihood of a bullish future heading into 2024. Next up, now we're getting fully into meme coins, which these last two are. Regardless of your take on meme coins, maybe you stay far, far away, but consider this more just for an example purpose than anything else. Or if you want to make a decision in your portfolio, understand that we're not giving investment advice when it comes to any of the prior assets or even these meme coins here. But we're looking at Pepe, which came onto the map fast about a year and a half ago. And it's fallen off pretty considerably. It did go on a bit of a run here in November, but the first half of 2023 was not very promising, and obviously 2022, the last quarter especially was really bad. But we look at Pepe now, and since December 8th, just about 12 days ago, I'm holding down Shift on my keyboard, and I'm just dragging to the right, and you'll see there in the upper left, it's telling me what the price difference is over time. So if you look at the close price of December 8th to December 20th, Pepe's down 25% just in those 12 days. So it's really gotten hammered. But one positive thing that I'm seeing is the fact that the top non-exchange addresses, we're just looking at the top 10, and you can actually change this to whatever you want. But I'm just looking at the mega whales for Pepe in terms of the biggest non-exchange addresses and the biggest exchange addresses. The red represents the non-exchange addresses, and they've been going through the roof lately. It looks like just since that same day, or we'll make sure we're on December 8th, holding down Shift again, dragging to the right. Since that same day, 2.85 trillion Pepe have been accumulated by these top 10 non-exchange addresses. And just for context, that's a 7.2% rise in their holdings. So you can see, when they start to accumulate, this isn't going to happen all the time, but between October 24th and the 31st, that week, we saw a big run up in Pepe. So like I said, nothing is a 100% certainty, but it does add to the argument that Pepe could have a turning point coming, especially if we were to look at the non-exchange addresses compared to the top 10 exchange addresses, which hold less and less, meaning those uber whales out there, maybe they're just for liquidity purposes, but regardless, there is less Pepe on exchanges that could be sold off at any given time, theoretically. So we like the fact that the mega non-exchange whales are getting richer while the mega exchange whales are getting poorer at this moment. That's a good combination. Last but not least, as promised, one more meme coin out there, and this is the total supply held by the top addresses of Apecoin. And we're looking, I customized it to be about 150 addresses. This wasn't handpicked to make the story look better. It's pretty much mostly the top 10 or 20 that are rising the way they are, but I like to look at 150 for the purpose of keeping it kind of even regardless of how big or small the market cap is. Even Bitcoin's or Ethereum's top 150 addresses can tell a story, just like Apecoin, which is outside of the top 100, can still tell a story because there's still that amount of whales and sharks for almost every asset, at least within the top 500 market cap. So what we're doing right now is we're looking at the amount of ape cumulatively, just overall, how much Apecoin is held by the top 150 addresses combined. And the answer is quite a bit more than there was 3 months ago. We look at September 21st, we had 674.3 million Apecoin in these addresses. Now we're at 707.5. So that's an increase overall of approximately 4.9% more supply held during that time. And yes, Apecoin has gone up just like most assets out there over the past 3 months. But I like this. This is a bullish divergence just in the short term. Looking at the past week, price goes down, amount held by these top wallets goes up. Pretty good sign right there. And that doesn't take an expert to understand. When you've got the largest wallets out there who know the coin the best, they have the most at stake, and they're paying the most attention to Apecoin and how it's developing at any given moment, when they're accumulating pretty consistently, I might add, over the past 3 months, that's a good sign that going into 2024, there could be a decoupling at some point that makes Apecoin holders pretty happy. So that's a wrap in terms of these 6 metrics. I'll be doing more of these, and in the comments, definitely let me know which metrics you'd like me to take a closer look at, and perhaps even what the leaders are at any given time for that metric. The more we can understand all of these metrics together, the better picture we can put in our minds and to use for our portfolios for future trading decisions, and be informed much better than the average trader out there who's just relying on influencers or TA or resistance levels of some type. We've got a lot to cover on Santiment in the future, so stay tuned for more. Leave a like, and we love the comments too. Thanks for tuning in, and we'll talk to you next time.